What if I told you that for less than the price of a new iPhone you could set yourself up for long-term financial growth and potentially life-changing returns? With just $1,000 you could buy into two undervalued companies that are not only overlooked by most investors, but are also poised for massive growth in the coming years. Today, I'm revealing two dirt-cheap stocks flying under the radar, hidden gems that could be the next big winners in your portfolio. These aren't risky penny stocks or speculative plays, they're established profitable players with real growth catalysts and a proven track record of delivering value to shareholders. One is a global leader in natural resources, trading at a bargain price compared to its true worth, and benefiting from worldwide demand. The other is a tech pioneer powering the energy sector, using innovation to drive efficiency, and its current valuation is screaming buy for savvy investors. Both companies have strong balance sheets, impressive cash flow, and strategic positions in their industries that make them resilient even in tough markets. The best part? You can start a position in both with just $1,000, making this strategy accessible for nearly any investor. This isn't just about finding cheap stocks, it's about uncovering real value that could multiply your investment over time, building wealth steadily. We'll break down their business models, explore their growth drivers, and show you exactly why these stocks are priced for perfection right now. If you want your money to work harder, grow faster, and uncover opportunities most people miss, you're in the right place. Smash that like button, share this video with your friends, and subscribe for more investing insights. Let's dive in and discover these two incredible stocks. First up, let's talk about Teck Resources, ticker symbol TECH, a global leader in natural resources with a focus on sustainable mining and a legacy that stretches back over a century. Teck is a name that might not be on every investor's radar, but it absolutely should be. Teck isn't your typical mining company. It's a modern, diversified powerhouse producing steelmaking coal, copper, zinc, and specialty metals. The company's operations span continents and supply the raw materials that fuel the world's progress. These materials are the backbone of everything from skyscrapers to electric vehicles and renewable energy. Without Teck's products, the infrastructure of tomorrow simply wouldn't exist. Teck sits at the very start of the supply chain for these global trends, making it essential to the future economy. Its reach extends from the mine to the manufacturing floor, quietly powering the world's most important industries. So why is it so cheap? The answer: market sentiment hasn't caught up to Teck's transformation. Investors are still looking in the rearview mirror, missing the company's forward momentum. Teck just sold its entire steelmaking coal business to Glencore for $9 billion. A game-changing move that fundamentally reshapes the company's future. This sale floods Teck with cash, allowing it to pay down debt, invest in high-growth projects, and return capital to shareholders. It's a strategic windfall that gives Teck the flexibility to pursue new opportunities and reward its investors. The market is still focused on Teck's past, not its future. Many investors are anchored to the company's legacy as a coal producer, overlooking the dramatic shift underway. Now, Teck is pivoting to become a pure-play copper growth company. Brilliant timing as copper demand is set to explode with the green energy transition. The company's copper assets are world-class, and its timing couldn't be better. Electric vehicles and renewables are copper-intensive, and Teck is positioning itself at the heart of this growth. Every EV, wind turbine, and solar panel needs copper, and Teck is ready to supply it. Even before the Glencore deal, Teck traded at a discount. Now, with a cash-rich balance sheet, the value is even more compelling. The company's financials are stronger than ever, yet the stock price doesn't reflect this reality. The stock's forward price-to-earnings ratio is well below industry averages, like finding a designer watch at a flea market price. It's a rare chance to buy quality at a bargain. Teck isn't just sitting on its assets. Its Quebrada Blanca Phase 2 (QB2) project in Chile is about to double its copper production by 2025. This is a massive transformative project that will put Teck among the world's top copper producers. This is real near-term growth, not a distant dream. The expansion is already underway and the results will be felt soon. The company is unlocking billions in value, deleveraging and focusing on a commodity with massive future demand. It's a textbook example of smart capital allocation, yet the stock price lags, a classic case of the market mispricing a company in transition. This disconnect creates a window of opportunity for savvy investors. As Teck shifts from a legacy coal company to a modern copper giant, expect a major re-rating. The market will eventually recognize the new Teck, and when it does, the upside could be dramatic. Investors today are buying Teck's future at a price reflecting its past. This is the kind of setup that value investors dream about. Teck is also committed to shareholder returns, with plans for special dividends or buybacks from the Glencore proceeds. This means more money in your pocket as the company rewards those who see its potential early. You're buying $1's worth of assets for 60 or 70 cents, a value proposition that excites even legendary investors. It's rare to find this level of discount in a company with such strong fundamentals. Strong management, a clear vision, and world-class assets make Teck a standout. The leadership team has a proven track record of executing on ambitious projects and delivering results. The disconnect between intrinsic value and market price is an opportunity too good to ignore. When the market finally catches up, early investors will be well rewarded. Teck's focus on sustainability and ESG performance further de-risks the investment. In today's world, responsible mining isn't just a buzzword, it's a requirement for long-term success. It's consistently ranked as a leader in responsible mining, reducing regulatory risk and attracting ESG-focused investors. This reputation opens doors to new capital and partnerships. This isn't just good for the planet, it's good for business and stability. Companies that lead on ESG are better positioned to weather regulatory changes and social pressures. With the strategic sale, copper pivot, 𝗗𝗑𝗏 project, and fortress balance sheet, Teck is a screaming buy. All the pieces are in place for a major re-rating. The market is asleep at the wheel, and that's our cue to act. When the alarm finally rings, you'll want to be already in the stock. Commodity experts see the coming copper supply deficit, but the broader market is stuck on old news. As the world electrifies, copper will become even more critical. This gap between perception and reality is where big opportunities are found. The best investments often come from seeing what others overlook. The timing is perfect. The Glencore deal is closing, cash is coming in, and catalysts are near term. This isn't a story that will take a decade to play out. We're not waiting years for this story to play out. Value realization is on the horizon. The next chapter for Teck is about to be written, and you can be part of it. The investment thesis is simple: a great company, positive transformation, and a market that hasn't caught up. Sometimes the best opportunities are hiding in plain sight. Teck is shedding a legacy asset at a fantastic price and doubling down on the commodity of the future. It's a bold move that sets the company up for long-term growth. The risk-reward profile is attractive, downside cushioned by assets and cash, upside from a likely valuation expansion. Few companies offer this kind of safety net with so much upside potential. Operationally, Teck is executing on growth. Financially, its balance sheet is about to be one of the strongest in the industry. This combination is rare and powerful. Strategically, it's perfectly positioned for the next decade's biggest commodity trend. As the world transitions to cleaner energy, copper will be the metal everyone needs. The company carries a market cap of $16.93 billion, with earnings per share of 0.59 cents in Canadian dollars, and a price-to-earnings multiple of 81.02. For 2024, Teck reported revenue of 9.06 billion Canadian dollars and net income of 406 million Canadian dollars, reflecting steady performance through a choppy commodities cycle. For investors with $1,000, putting a portion into Teck could be a smart move this year. It's a chance to participate in a global shift toward electrification and sustainability. You're buying a world-class asset portfolio at a deep discount, with clear near-term catalysts. The upside is real, and the risks are well managed. It's a compelling story of value, growth, and transformation. Teck is evolving, and those who recognize it early stand to benefit the most. Don't let this one slip by. Opportunities like this don't come around often, especially in the resource sector. Remember, investing is about buying businesses, not just tickers. Teck is a business with real assets, real cash flow, and real growth ahead. Teck Resources is stronger than ever. The market just hasn't noticed yet. That's your edge as an informed investor. This is your chance to get ahead of the curve. When the narrative shifts, you'll already be positioned for the upside. If you want exposure to the green economy and a company with real assets, Teck is a top pick. It's a rare blend of sustainability, value, and growth. The market's mispricing won't last forever. Savvy investors will act before the narrative shifts. Don't wait for the headlines to catch up. Teck's management is focused on shareholder value, not just growth for growth's sake. Every decision is made with long-term returns in mind. The company's sustainability leadership attracts long-term capital and reduces operational risks. It's a magnet for investors who care about both returns and responsibility. As the world electrifies, copper demand will soar, and Teck is ready to supply it. The company's assets are in the right place at the right time. The 𝗗𝗏 project is a game-changer, doubling copper output and driving revenue growth. It's a catalyst that will reshape Teck's earnings profile. With a cash windfall, Teck can invest, return capital, and weather any market volatility. This financial strength is a huge advantage in a cyclical industry. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next, let's talk about Pason Systems, ticker symbol PSYTF, a pioneer in energy technology that's quietly powering the world's oil and gas industry from behind the scenes. Pason isn't a household name, but it's the intel inside for drilling rigs, providing the hardware and software that power modern drilling operations across North America and beyond. Their electronic drilling recorder is the industry standard, collecting and displaying real-time drilling data that operators rely on to make critical decisions every minute of the day. With dominant market share in North America, Pason's solutions are essential for efficient, safe drilling, and their technology is present on the vast majority of active rigs. This creates sticky recurring revenue, a dream for investors, as customers rarely switch once Pason systems are in place. Pason's tech helps drilling companies cut costs and boost safety, making it a must-have, not a nice-to-have. Their systems help prevent costly mistakes and keep workers safe. So why is the stock so cheap? It's guilt by association. The market lumps Pason in with volatile oil producers, even though its business model is fundamentally different. But Pason is a tech company serving energy, not a commodity producer. Its business is high margin and capital light, with a focus on innovation and efficiency. They get paid for their technology, not for the price of oil. Their revenue is tied to service and data, not commodity swings. As long as rigs are active, Pason profits and drilling activity remains robust, even as the energy sector evolves. The world still runs on oil and gas, and efficient, data-driven drilling is more important than ever as companies face pressure to maximize output and minimize environmental impact. Pason is a cash machine with zero debt, a huge advantage in today's market, giving it flexibility and resilience that few competitors can match. All that cash goes to reinvesting in tech and rewarding shareholders, fueling both future growth and steady returns. Pason pays a healthy, sustainable dividend, making it attractive for value and income investors who want both growth and yield. The stock trades at a single-digit PE and a deep discount to its historical valuation, offering a rare value opportunity in the tech sector. This isn't a company in decline, it's a profitable, growing market leader mispriced by sector sentiment and misunderstood by many investors. Pason is innovating, moving into data analytics and automation and expanding internationally, opening up new markets and revenue streams. As they grow beyond North America, the market is assigning zero value to this global runway, ignoring the potential for significant international growth. Pason's decades of drilling data create a powerful moat. New competitors can't replicate this advantage, and their data is becoming even more valuable as the industry digitizes. The management team is disciplined, focused on profitable growth and shareholder returns, with a long-term vision that's rare in the sector. You get a dominant market leader, deep moat, pristine balance sheet, and strong cash flow, all at a bargain price that's hard to find elsewhere. The market's fear of energy stocks has created a phenomenal buying opportunity for those willing to look past the headlines. The risk? A severe drilling downturn. But at this valuation, much of that risk is already priced in, and Pason's business model is built to weather industry cycles. Pason's financial strength means it can weather downturns, invest in R&D, and even acquire distressed competitors, strengthening its position during tough times. Compared to other tech companies, Pason's valuation gap is enormous, and the market is missing the true value of its technology platform. If it served any other industry, it would trade at 2 or 3 times its current multiple, simply because of its recurring revenue and high margins. This is a classic picks and shovels play. Pason sells the essential tech to the energy industry, profiting no matter which producer wins. It's a smarter, lower-risk way to get energy exposure, letting you benefit from the sector's upside without the wild swings of commodity prices. Investing in Pason is a bet on data, efficiency, and market leadership. 3 things that are only becoming more important in the energy transition. As the energy landscape evolves, the need for smart, data-driven operations will only grow, and Pason is perfectly positioned to lead that transformation. At today's price, you get a high margin of safety and significant upside, with limited downside risk thanks to the company's fortress balance sheet. For a $1,000 investor, allocating to PSYTF means owning a cash-rich, dividend-paying market leader at a dirt-cheap price, with the potential for both income and capital appreciation. Don't let the sector label fool you. Look at the business: market share, balance sheet, cash flow, and moat. The fundamentals are rock solid. By every measure, Pason is a phenomenal business, with a track record of innovation and shareholder returns. Right now, you can buy it at a truly bargain price before the rest of the market catches on. The market's mispricing won't last. Savvy investors will act before sentiment shifts and the valuation gap closes. Pason's international expansion and innovation pipeline are ignored by the market, creating hidden upside that could drive future returns. The company's data advantage and customer relationships are nearly impossible to disrupt, giving it a durable edge over any would-be competitors. As energy companies demand more efficiency, Pason's value proposition only grows, making it even more indispensable to its customers. The dividend provides income while you wait for the market to catch up, rewarding patient investors with steady cash flow. Pason's management is focused on long-term value, not just short-term gains, ensuring the company's future is as bright as its past. This is a rare chance to buy a tech leader at a value price, a combination that doesn't come around often. Don't miss out on this hidden gem. Opportunities like this are few and far between in today's market. Pason is the digital backbone of energy. Own it before the market wakes up and re-rates the stock. The upside is real, the downside is limited, and the opportunity is now. This is the kind of asymmetric bet value investors dream of. The company stands at a market cap of $658.99 billion, with earnings per share of 0.92 cents in Canadian dollars and a price-to-earnings ratio of 12.77. Revenue for 2024 totaled $414.13 million, and net income came in at $121.5 million Canadian dollars. Together, these names illustrate two distinct profiles: Teck's diversified resources footprint and Pason's energy tech exposure, each offering different earnings dynamics and valuation setups for investors to consider. For value and growth, Pason Systems is a top pick, combining the best of both worlds in one overlooked stock. Add it to your watch list or your portfolio today, and position yourself ahead of the crowd. This is how you buy quality at a discount, by focusing on the fundamentals, not the sector label. There you have it, Teck Resources and Pason Systems, two dirt-cheap stocks the market is ignoring. Both offer rare value and upside. Don't miss your chance to accelerate your wealth-building journey. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments, no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Share your thoughts in the comments and subscribe to the YouTube channel. Thanks for watching, and I'll see you in the next one.